All right, let's get some reaction from Evan Seigerman, biotech analyst at BMO. Welcome, Evan. We're glad to have you with us. What do you think these deals are signaling about the drug business broadly and the biotech drug business more specifically?
Well, it feels like a breath of fresh air here in San Francisco. The tone is noticeably lighter. Everyone seems to be happy. It really helps when you start off the JP Morgan healthcare conference with a few deals. As you said, there were also some deals announced last month. And of course, the big closing of the Pfizer Seagen transaction, which everyone was closely watching. So it's really good for the sector because it's not just healthy for the big biopharma names, it's also healthy for the small biotech names that need funding. It shows investors that there's a path to an exit.
Why are these? I can see why the deals are sort of the tonic that the sector needed. But why are companies like Pfizer, Bristol Myers, and J&J down so much over the past year? Pfizer down 39%. I suppose it has to do with sort of the decline of sales of COVID drugs and COVID vaccines. But what else could it be?
So there's a lot of nuances here, because if you look at something like Lilly, it's up massively year over year. But something like Pfizer, they were transitioning away from COVID, trying to reset their revenue base, really kind of misaligned expectations between what management was saying and what investors thought. Now it's a reset. Seagen's coming in, a lot of revenue opportunity there. Bristol, same thing. LOEs after LOEs after LOEs. They need to replenish that revenue base. And some of their new launches weren't doing as well as the investors had hoped. So now they're bringing in new assets to hopefully to accelerate that.
And what about with Cytokinetics? So we had Novartis on with Jim earlier.
So we heard in the Wall Street Journal's reporting that Cytokinetics may be taken out by Novartis. I don't cover either one of those companies. But given the reports, that is signs of a healthy ecosystem. I know at the conference, Novartis was downplaying it, but that's probably just the game that they're playing right now. I could see something happen. Usually when the Wall Street Journal reports on it, it does end up happening.
What, Evan, would you say are the super cycles happening in the healthcare space right now that are driving these deals? Obviously, weight loss to the side. We're talking more about oncology. What else?
A lot in oncology, a lot in this subset of oncology, radio-oncology. You saw that deal that Bristol took out, RAYS. So these are kind of radiotherapeutics to treat cancers.
What does that mean, radio-oncology?
That's a very good question. It's basically taking a drug, adding a radioactive particle to it to target it right to the tumor to kind of destroy the tumor. High science, high manufacturing, a lot of interest there. I also want to add an inflammation. I believe that the CMO Merck was talking about doing more deals in inflammation. We saw a lot last year. I cover a company called Morphic. They have an oral drug for IBD. Data coming next year could also be very interesting for strategic.
Give me a thought on Eli Lilly and I guess Novartis. But first on Eli Lilly, is it the sort of irresistible force here in the space?
Well, Eli Lilly is still our top pick in big pharma. We do like Lilly. We think that Zepbound is going to have a fantastic launch this year. Remember, this is their drug for obesity that was recently approved in November. They're off to the races there. We think that there's a lot of enthusiasm around it, so we're really focused on that. I don't cover Novartis, but we could see some more deals there, especially with the reports in the Wall Street Journal with Cytokinetics and Novartis.
All right, Evan, thank you very much. We appreciate your candor and your ideas. Evan Seigerman. Appreciate it.
Thank you.